So it's game day, right? We have the Federal Reserve coming out today with their widely anticipated announcement. Of course, it's the most important rate decision ever made. You'll hear that on the mainstream media. No, it's not. The probability of a Fed rate cut, I think the market is priced in something ridiculous number like 93%. In all probability, the Federal Reserve will not disappoint the markets because the markets are built on a house of sand at this point in time. If you take a look at a chart of the S&P 500 weekly basis, you'll see that what we're doing is we are very extended, going back. Where's my chart? Oh, by the way, while I'm looking for this, 2 more days of sober October. For those of you out there, sorry, for those of you out there that are joining in on sober October, stay strong. I think I'm down about 9.5 pounds. I can't get down to my target weight, 179. I'm just this far away. So if I don't get there really, really quick, like within 2 days, I'll be spending the next, this morning and tomorrow morning, doing about 5 miles on the elliptical immediately after this recording. I don't have any scheduled meetings this morning. So, where is, here, let's drill down here to, let's go to a 10-year view of the S&P 500, and we are so extended here in a ever widening megaphone formation. And this this chart is indicative of where this market on a major league pullback could go to. Here is the peak back in January of 18. Then we pulled back, rallied up to a new high in September of 18, took out prior lows. And that low was realized back in December, January of 2018. So technically, we broke. This is on the news that the Federal Reserve was going to what do they call it about their balance sheet? It was on autopilot. And the markets freaked out about it. The rolling off, the reduction of their balance sheet, which is like a rate hike for the economy. And the markets did not love it. And here we are yet again. We have sequential higher highs. And if we break, there's a good chance that we pull back down and retest the lower band of this megaphone formation. And were that to happen, let's extrapolate this out. Now, I know it. I know you're probably saying out there, Bob, you've been saying the market's going to go higher. Yep, it is. And if the government does anything like the BOJ, the Bank of Japan is doing, they'll be in there buying stocks. But we have a price target at current. This is why I like TrendSpider. I gotta get this chart set up there. Okay. We have a near-term price target of 3,300 on the S&P 500. If we break and we begin to break down below this support level here at 28.24, then 27.28, we're in all probability, especially here, 26.11. If we break these support levels, we could quite possibly come down to, and this is a major league drop, down to the 2150 level on the S&P 500. So just watch the weekly charts here and watch your historic support and resistance levels. Let me bring up chat. Do we have anybody in? Good morning, everyone. If you folks are out there on Twitter, can I ask you to retweet, like, and leave a comment as well? I'm really trying to build up my Twitter audience as well as YouTube. YouTubers, you know the deal. If you could just click like, subscribe to the channel, click that bell button, and that'll help me out a great deal. Okay. Yep, we're there live on Twitter. All right, cool. All right, and our audience is growing there. And Jake from TrendSpider was good enough to retweet yesterday's program. So thank you, Jake, if you're out there. Appreciate it. So this is our macro view. And what I want to point out here is that while we have broken out on price, our indicators are not, I don't know what's going on here this morning. Our indicators are not validating the breakout on RSI. Stokes are looking good. We have higher lows there, no higher highs. It's going to be difficult to put in higher highs here because we pretty much maxed them out the last time around. And here's the Pimp Mac Daddy, right? The Pimp Mac Daddy of them all is volume. We don't have any volume. Look at the week so far. Here we are. It's Wednesday, and we have a blip on the screen in terms of volume. You may be saying, you know what? It's probably because you have the Fed meeting and quite possibly traders waiting for the GDP report to come out. Okay, I'll buy that. But volume had better pick up to the upside on the back half of this week to make this or give this market breakout, at least on the S&P 500, validity. So keep an eye on this megaphone formation. Watch your support levels. And let's get to it's 5:07 in the AM. Let's get to the headlines this morning. And this is a question. You can see I've been on looking for pool supplies, deals, sales. I just got my shock for next year at a deep discount off of Leslie's. I'm so happy. All right, so headline, FOMC preview. If the Fed doesn't cut, brace for impact. If the Fed cuts, then what? Great question. Great headline. So I'll give you my thoughts on this. If the Fed doesn't cut, look out below because it's widely expected. If the Fed cuts, I think it's priced in. Might we press higher? It all depends upon the statement. If they provide the markets with forward-looking guidance, meaning what's next, markets? Remember that the markets are a forward-looking indicator, and they do not like indecision. And what the FOMC has been providing us with of late is a lot of indecision. So just be wary of the announcement. Listen for their forward-looking guidance because I can assure you that the algos will be listening for forward-looking guidance. Now, I discussed this with members last night on Market Wrap, and we booked profits on Monday on the S&P 500. After we had that surge, we booked our profits on the S&P 500 on IWM. And yesterday, we saw reversal bars on the SMH, and we saw a pullback on the S&P 500. So I'm glad that we did. We are expecting a pullback here and a retest of support levels, and that's what we'll be looking to get back long again. You don't need to sit in front of your computer. Just watch and wait and see how we close out the day. Set an advanced order and get put into the market. Let your computer do the work. Don't sit there ogling the computer. Go to work. Do your day job. And just set those advanced orders. Watch the 3 p.m. hour. Look at your phone. No reason to go nuts here about watching the screen and seeing how a 5-minute or 10-minute chart does. All you care about is a pullback and a retest of support levels. If we hold and we begin to break out, you could add more. But right now, it's all about the validation of the breakout, because right now I believe that this market is on a bed of quicksand. And the reason why I divine that is because you have earnings. Hey, Clouded Trader, good morning, brother. You have headlines regarding earnings, which are not wonderful. You're seeing EPS beats, and you're going to see headlines out there. Record EPS beats, 81% of companies beating on expectations. Expectations. What they don't want to tell you, lower than provided analyst expectations. They downgraded their expectations. And of course, they're beating them now. It's the rah-rah game. They want to get you all excited. Wow, companies are doing great, beating earnings. Look at their sales. Look at their revenues. Look at forward-looking guidance. That's what we should be paying attention to, not EPS. That's a rigged number. So what else about the Fed rate cut? I'm going to be looking for the knee-jerk reaction. The knee-jerk reaction out of the Federal Reserve headline is usually the wrong reaction. I pound the table on this constantly. So if we shoot up higher on a headline, Fed rate hike for this month is in the books. It's done. They cut rates. You see the market shoot up higher. Remember, it's priced in. Don't go chasing the market. You want to hear how the market absorbs the forward-looking guidance, and that takes time. Algorithms trade like this, rapid fire, and they're being manipulated by the headline. I think that the headlines are manipulating the algorithms nowadays. That's the behavior that I'm seeing. And I would wait until this ridiculous Fed. It drives me crazy how much Jay Powell speaks, because he's not a good speaker. He's robotic, and he has a lot of faux pas in his press conferences. I wish he would stop. When it comes down to Fed banking, they've come a long way with transparency, but in my opinion, they've jumped the shark in terms of transparency. It's time to go old school a little bit here, less transparency, and this all feel-goodiness about being open with the media it's not paying them dividends. So I digress. Let's go on to another headline here. And it had to do with Peter Schiff. Peter Schiff is one of the guys I follow quite often. I think that Peter is a great guy with regard to the macro view on the markets. And I would strongly suggest that everybody subscribe to his podcast on YouTube. Because while he's not a great, I'll say this about him, he fancies himself not a great, I wouldn't say that. He's never said that, as far as I know. A great technician or a good technician. He has his issues. He stated that we went into a bear market a couple of months ago. I didn't say that. I thought we were breaking out to new highs. That being said, in terms of his macro view on the economy, on the Federal Reserve, I mean, there is none better than Peter Schiff. He called correctly the financial crisis, and he's the redheaded stepchild of Wall Street, but the guy has it nailed. He was calling for a return to rate cuts well before the Federal Reserve ever cut rates. So I strongly encourage you, go to his channel, Peter Schiff. It's on YouTube. He's got a podcast out there as well, but you can listen to his podcast on YouTube. Let's get to the pre-market activity. All right, let's kick things off with AMD. AMD announced earnings after the bell yesterday, and their setup into this morning is not looking good. Okay. And here's where it gets wonderful. Here's the headline, folks. This is off of Market Watch. AMD reports highest revenue in more than a decade. Wow, that's exciting, right? Go in there and buy those shares. But slightly light forecast makes stocks volatile. So here's the knee-jerk reaction. Here's what happened after the bell yesterday. They shot up, consolidated, shot up again, and then rolled over. So here's the reality of how we're going to open up. Had you just taken a few minutes, stepped away from your computer, had a cup of coffee, and you wanted to get long on the shares, longer term as an investment, you would have gotten a much better deal after hours yesterday rather than buying immediately after the bell at the 4 p.m. hour, Eastern Standard Time. So just avoid the headlines here. I want to see how Cheesecake Factory closed out. They were shooting up higher. And not that this is a market mover, but I was watching this over the weekend, and this chart looks really outstanding. So we may, if we have time, we'll probably go to 5:30 this morning, Eastern Standard Time, and see how cake is looking on a weekly view. What else do we have up here? Let's go to the pre-market activity. I wanted to start off with the 10-year bond because the 10-year Treasury bond price, not the yield, caught a bid yesterday and finally was able to break out above. This is a 4-hour chart. These will all be 4-hour charts. They broke out above this upper band of resistance. Now you have another resistance level above right here. I have a lag here on this computer, folks, so I'm sorry. I cleared cache already, too. I'm still getting it. So, while I like the 10-year bond, it may be in the early stages of a run here. We have some resistance above. We had the Federal Reserve meeting. And we are still in a downtrend on a short-term basis. Now, we're looking for a breakout here above this upper band of resistance, which coincides with the 20-period moving average on a 4-hour basis. So, 10-year yield looking interesting, gaining momentum, but no real serious bids just yet. And we're probably not going to get one until after the Federal Reserve announces their decision. Taking a look at the dollar. The dollar is under some pressure. And I don't mean necessarily by the fact that it is slightly down this morning. I mean, what I mean is that I don't like the dollar at all. I mean, this to me looks to be a bear flag formation. And we have broken the lower band of support on that bear flag formation. And it looks as though we're trying to recapture that lower band now. They're trying to bid it up. And it may be difficult for you to see it out there. I'm going to drill down further. Sorry again, folks. There's something just... I should have rebooted before I began this. This spooling is driving me crazy. Okay, so here's the attempt to try to recapture this lower band of support, and it's not catching much in terms of support. We're being rejected here. Watch for continuation move lower on the dollar below this lower band of support. So as we proceed into the trading day, this is a valuable chart and the reason why an intraday chart is a valuable chart is that I use the 4-hour chart as a precursor to reviewing the daily chart. And once you begin to see, because I'm not a day trader, I don't believe in sitting in front of your computer all day and trading in and out of stocks. It's just, some people are great at it. I'm not. It's not my gig. I'm a longer-term strategist. The fact that we have broken down below this lower band of support in advance of the Federal Reserve meeting is quite concerning. So who is benefiting here? My guess is that it's the euro. Because they kicked the can down the road for a vote over in the Eurozone with regard to Brexit. And they're getting new elections over there. I think that you're probably going to see a wipeout of the current government, with the exception of the Prime Minister, fairly soon. Yeah, so it's the euro that's catching a bid here. So the euro's looking pretty good. We were rallying in late September into October, and then we fell into this base. And this base appears to be gelling, and we are beginning to see a breakout on the euro. And why does this matter? Why am I spending much time on the euro? It matters because we are long of precious metals. We are long of the miners. And we want to see a weaker US dollar. And you can see that the euro broke out here on yesterday, the 29th. And we've been bouncing around, retesting support. It appears as though we're going to get follow through to the upside on the euro dollar. So I would expect a bid to be kept under the euro into December, when they finally make this, when they finally have the elections in the United Kingdom, and then we'll see whether or not Great Britain leaves the European Union. I don't know when that announcement's going to be. Let's go over to the price of gold this morning. We were down yesterday, but we rallied off the lows of the day. Our gold mining trade did well yesterday in that it closed higher relative to the price of gold. So I still like that trade, and I think it'll do well post-Fed announcement. It may take it on the chin on the knee-jerk reaction. I'm not going to care about that. And even if they don't cut, I was asked this the other night. What if the Federal Reserve doesn't cut rates? What happens then? Meaning to gold and the gold miners. Longer term, I don't think anything happens. I think they're going higher. This is the problem that a lot of people have. They're looking at the Federal Reserve and saying, okay, if they don't cut rates, I don't want to buy gold because that means that gold is going to drop. No. Remember when gold began to rally? It was actually back in 2015 after the first rate hike. Go back and check out the charts. After the first rate hike in December of 2015, the knee-jerk reaction was down. However, subsequently, we rallied and rallied very, very strong into future rate hikes. Now, granted, that rally didn't hold up. Hey, Sam, good morning. 10:30 a.m. Over in Italy. Sam's over in Italy. Good morning, brother. So the reality is this, is that we have over $200 trillion here in the United States in unfunded mandates. We have $1 trillion a year deficits, and now you're going to have the reins taken off the banks, their ability to trade with depositor money and get bailed out by the depositors in the future when and ultimately they mess up, they drop the ball and crash. It's a recipe for disaster for the financial markets, and there's no other place to be in my mind than real assets. And gold is a real asset and is gaining a little bit of strength here this morning. Let's check out silver. Let's go over to the spot price. So silver is looking really good this morning. Let's talk about this chart for a minute. This is a pretty chart. So we'll drill down. So last week we had, this was on Friday, right? Yep, Friday, 25th. We flashed an outside reversal bar, this 4-hour bar. We were trading above the 4 standard deviation Bollinger Band. And this is what I talk about all the time. Once you start ripping above the 4 standard deviation Bollinger Band, you got to get ready for your pullback. It's coming. And sure enough, we got it. You saw bottoming action here. And that was a sign that we were catching a bid. And yesterday, we recaptured that support level. We've been retesting, bouncing, retesting. And now it appears as though we are going to break out. There you have it. I think that we're going to press higher here on silver today. Our higher lows are intact. So silver looking very, very good. Let's segue over. We have about 4 minutes left. Let's segue over to the S&P futures. The S&Ps are down. They're holding gains. I'm satisfied to be sitting with cash. We made profits real. We were trading the leveraged ETF, the SPXL. We made those profits real. The IWM, same deal. We made those profits real. And we're just sitting with cash right now. If we get a pullback and a retest of support levels, we will look to open up those positions again at lower prices or on a continuation move higher. So the S&P 500 is flat. Nothing going on here. Everybody's waiting for the news. The Nasdaq, let's go to the 100 because, yeah, they're down a little bit more. Point terms, percentage terms, not so much. And we're just consolidating gains here. The AMD news, really no impact on the Nasdaq 100. Google didn't really have an impact on the Nasdaq 100. Taking a look at, I want to take a look at home heating oil because it was surging the other day. Yeah, this is going to go higher. We're down right now. We're going higher though. Here's the macro view. We're putting in higher lows. We broke out here on the 24th. I'll tell you why this matters in a moment. We pulled back, broke support, recaptured here yesterday, consolidating. We're going higher here. Were I a futures trader, which I'm not, I would be looking to put on a trade here to the long side on home heating oil. However, I will say this. I arbitraged home heating oil by filling up my tank with home heating oil at current prices in anticipation of, hey, NEE. I forgot about NEE. We'll go to that in a moment. We'll wrap it up with that, Sam. In anticipation of rising prices, and I think we're going to get that. Why does this matter? It's inflationary. The Federal Reserve doesn't want to talk about energy prices because they like to back out those numbers out of the core CPI. Or out of CPI, and just looking at the core. What's the core? X, food, and energy. So food prices don't matter. Energy prices don't matter to the Federal Reserve. It's a very, very convenient job. Let's take a look at light sweet crude. We broke out. All right, so here's the higher level view. Higher lows. We're building the right side. Here's the bottom of the base. We're building the right side of the base. Then we'll get a downward sloping handle in all probability, and then we're breaking out on oil. This morning, however, we have broken out now. We're pulling back to do a retest. We may do this a couple of times, but oil is looking very, very bullish into the new trading day. Let's leave off with NEE, maybe a couple other stocks. Let's move over to TrendSpider. Now, we were bullish on NEE. And then it fell off my radar screen. I don't know why. All right. So let's go to the higher level view. Let's get rid of the overlays here. All right. I still like the chart. However, here's the caveat now. I don't like topping tails. What's a topping tail? It's the wick, the shadow, whatever you want to call it, cupcakes. I don't care. It's the line on top of the candlestick. And what that implies, it implies that we have sellers above. But we are at all-time highs, I believe, right? And there shouldn't be much in terms of overhead supply. Let's overlay monthly support levels. A beautiful breakout here. We broke out back in June, retested in July, and continuation move higher here. I think that we're due for a pause, a respite, a reprieve. PRR, pretty cool. Let's drill down here to a weekly view. All right, so this is interesting. So we broke out last week out of this pennant formation. And what we're doing now is that we're pulling back. I think that these shares can be bought. However, there are 2 trading days left to go in the week. And I would keep a stop right under this lower band of support, which is at current, what's the low of the week? 231.20. I would keep that stop ultra tight, let's say at 230.50 to 231 per share on a closing basis, on a weekly closing basis, meaning if we can't hold this breakout and we drop back down into this pennant formation, I want out. So it's an interesting trade in that you have very little in terms of downside risk, but you have a lot in terms of upside potential. So that makes it attractive. Daily chart. Yeah, same deal here. I'm going to talk about these Stokes in a moment, so stick around. They're important. The price action yesterday was very bullish. It clearly implies that we're retesting support. That doesn't mean we're going to hold it, but in all probability, it will. Why? Why do I say that? How do I know that? I may be a bit contrarian, but I do not delude myself into believing that the trend is over when it's not. The trend on a macro view, monthly view, weekly view, is daily view, 4-hour view is clearly to the upside, and that has not changed. The market will tell me when that changes. I'm not that smart to outguess the market. So we're retesting support here. I think that we're going to get a continuation move higher. I spoke earlier with regard to the Stokes. Now, this is a bit of a concern, and it's a game changer if and when this does happen. Watch for this lower high. These Stokes need to hook up and move higher and confirm our new high. We're putting in a lower high because what happened here is that we closed off the highs of the day here on the 22nd. That sent the Stokes rolling over. And I would argue that in all probability, the reason for that price action is profit taking up and into resistance. And it makes sense as a technician. However, we want to keep an eye on the Stokes because if these lines begin to trade, both the fast line and slow line begin to trade down below the lower band of 50, not 20. I don't care about 20. I want 50. I want to watch 50. Rallies tend to fade when you get both lines trading down below 50 level on your stochastics. I use the slow stochastic, not the fast or full. I use the slow. I don't take anything away from either of the two others. I use the slow stochastic consistently so I get that consistent feel for how I should expect the price action to behave when you have lines on Stokes down below the 50 level. 4-hour chart, because I like this trade. So We broke out here, and the trend is still up on a 4-hour basis, but we broke out here. Actually, let's pull back here. Let's pull back here. And this is only a 4-hour chart. Let's not get nuts. Sam, ATH, is that a symbol or? We broke down below the lower band of support. We were consolidating, broke down, this support level held, then we broke out yet again, and then we rolled over. All right, so that's kind of a concern to me. But a sign, of course, that we have some profit taking as we rallied up and through the third standard deviation Bollinger Band. I talk about, oh, gotcha, okay. Thanks, Sam. All-time highs. We saw some profit taking up at that level. Me, were I long, I probably would have booked those profits as well. And however, the downside is that we have broken down below these two key support levels. So would I be looking to buy NEE on a rally back above this upper band of resistance in red at the 235.60 level? I would look to add. Where I would look to buy is hopefully we get more of a consolidation here. And what I would do is set an alert. On this declining, I want to get notified the moment it happens. So 15 minutes. I want to get notified Sam, I'll share this chart with you. And folks, if you like TrendSpider, there's a used discount code, CT25Z. Again, CT25Z. Get 25% off. That's the deal I have worked out with TrendSpider. All right, so we'll be looking to scratch the itch, open up a position here. We'll keep it active for a while. All right, so set it and forget it. We're looking for a breakout. Ideally, we consolidate further. We break out here. We get alerted at, say, the 232 level. We scratch the edge, open up a position there. We rally up to these resistance levels. We can consider booking profits at those levels, or if we break out above these resistance levels, we add to the position. So I would not add more after scratching the itch here on a breakout. I would wait for a breakout above these upper bands of resistance. Wait for the 3 p.m. hour. Again, folks, I'm not a day trader. I don't go buying stocks intraday. Not my deal. I like to wait for that final hour, the last few minutes of trade, to go buying stocks so that we don't get shaken out of a position when you see a surge of selling into the close. I want to avoid that. You bet, Sam. And with that, do I want to go over anything? Oh, you know, I want to go over Cheesecake Factory. I talked about this one over the weekend on Sunday Night Futures Live. Now, here's the monthly chart of Cheesecake, and we're trying to recapture at current on a monthly basis the prior lower band of support, which broke here back in August. Now, where did we close out the session last night on Cheesecake? $44 per share. So we should be right, still right at the current resistance level. I wouldn't go buying into the open on Cheesecake Factory. Where I would get really interested in Cheesecake Factory is on a rally up and through the upper band of resistance on a weekly basis. And we have, let's keep this active. It's a weekly chart. Let's keep it active for a couple of weeks. Let's go 18 days. Triggered twice. And we're good. Cheesecake Factory's looking good. Let's drill down here. Let's go to just simply a daily chart. Good move higher this week. So CAKE looking good on a daily basis, on a monthly basis. I like the setup here. LABU we're watching. It pulled back yesterday. We wanted to sell some puts. The shares got away from us. I don't want to go selling puts into strength. GLNG. Pulling back off of recent highs. I think we're going to retest this breakout point here at 1436. That can make for a nice trade, an opening position, then buy the breakout above this upper band of resistance. The only caveat there with GLNG is that the energy sector pulled back yesterday off the highs, so just be very, very aware. Thermo Fisher, we broke out here, daily chart. On the 25th, we're retesting. This is looking good. Let's go to a monthly chart here. A bit of resistance above, but the shares are looking good. Weekly view. Nice. We have a weekly breakout. We're retesting. Stokes are breaking out. RSI is breaking out. Thermo Fisher looking very, very good on this Fed day. And with that, that is it, folks. Everybody have a profitable trading day. Thanks for joining in. If you could, hit that like button, subscribe button. If you're watching this on Twitter, if you find value in it, please retweet to a friend. Let's get the word out about contrarian investing and alternative news media versus just simply CNBC and their algorithmic friendly headlines. We don't do that here. So everybody have a profitable trading day. I'll talk to you soon. And don't trade the knee-jerk reaction today on the news, please. Be patient, okay? I don't want to see anybody losing money. Be well, folks.